Friday's trading in the NASDAQ revealed a doji sandwich. Doji sandwich is very simple. Big trading day, a doji day, a day of indecision, followed by a big trading day. Because of the simple doji rule, which we know the price will usually move in the direction of how they open after a doji, when it opens positive, we know the magnitude of this candle is usually going to be the same magnitude as this candle, which immediately tells us this resistance level is not going to act as resistance anymore, which tells us we've come out of a wave, sideways move. Now we're moving into new high territory, which was confirmed in today's trading. At the same time, the Dow had traded positive on Friday, giving us a good indication that the T-line was going to continue to act as a support level. The fact that they gapped up the Dow today, knowing that this was a resistance level, was a good indication that they weren't concerned anymore about the resistance level. And as they went through, it told us now there was a new dynamic, that we were probably now in the next wave to the upside. Having this perspective allowed us to be in positions that were telling us the upside was going to continue, and allows us to get into profitable trade setups that are going to produce inordinately more profits than just having an uptrending stock. Our recommendation on CRON, C-R-O-N, has been working very well and not pulling back any based upon the fry pan bottom breakout, and then the markets staying positive have produced exorbitant gains. So this was nothing more than seeing what the pattern was setting up and taking advantage of what usually occurs after a pattern breakout, the fry pan bottom. Once again, this puts us in situations where if the market's moving up steadily, we're not in a situation that's moving like this. We're finding situations that are moving more in this manner. Knowing simple patterns like the bobble pattern, which is a very simple analysis of a J-hook pattern, where the first move fails at a major resistance level. It pulls back to a support level, which in this case is the T-line. When it comes back up through that resistance level, if you took out the 50-day moving average, you essentially have a J-hook pattern, a very high profit, high probability candlestick pattern. This allows us to be buying immediately on positive trading today, knowing that if it's supported here at the 50, our next likely target is up here at the 200-day moving average. This, again, puts us in situations where the probabilities are extremely good that we're in the right direction at the right time, and that we're in situations where the profitability is going to be extremely strong. Being able to analyze what commodities are doing, such as crude oil, which has now broken this downtrend based upon some bullish signals and a doji sandwich gap out, tells us that crude oil is probably heading in a positive direction. Now, whether you're trading crude oil or not doesn't really matter. If you're trading crude oil stocks, you know that the crude oil probably is going to add benefits to those charts. So you know you're probably trading in a right or the sector that's moving correctly. This analysis is easily used in any commodity trading, such as lean hogs today started right up after a little bullish signal on Friday, went up the limit today. And you could see how to trade this, whether you were trading on a daily basis or on the 10-minute chart. The 10-minute chart showed the big blast here, that if you got in as it was moving up, you knew when it got to the first resistance level, the 200-day or the 200 moving average on the 10-minute chart, it was time to take profits. You could even go short until you saw the next buy signal, in this case a morning star signal. Then there's your doji sandwich. This combination right here in candlestick analysis we call the McMuffin, which is a morning star signal followed by a doji sandwich, or a doji or morning sandwich, which is your McMuffin. Buying here told us where our next target was likely to be. Right back up to the 200-day moving average. You could take profits. Now it's up the limit. We'll be able to see how to trade it based upon a 10-minute chart tomorrow. The factors built into candlestick analysis is that human nature reacts the same way time after time. We can just graphically see where the buy and sell signals occur. That'll be it. We'll see you in the chat rooms.